They already made the decision. Not you, not the market, not supply and demand, the IMF. In a closed-door meeting that most people have never heard of, a group of the most powerful financial minds on the planet quietly decided what silver is going to do in April. And I'm not guessing. I'm not clickbaiting you. I have the data, I have the timeline, and I have the receipts. And in the next 17 minutes, I'm going to walk you through every single piece of it, step by step. So if you own silver, if you're thinking about buying silver, or if you've been sitting on the sidelines wondering whether $82 is the bottom or just a trap, you need to watch every second of this video. I'm your host, OG John AG, and welcome to Let Finance. And this might be the most important silver video you watch all year. Let me start by painting you a picture. It's late February 2026. Most of the financial world is focused on tariffs, on tech stocks, on the drama coming out of Washington. Nobody is paying attention to a quiet gathering of economists and monetary policy advisors happening behind closed doors at IMF headquarters in Washington, D.C. No press, no major headlines, just a small group of people who understand the global monetary system better than almost anyone alive. And they are talking about silver, not gold, silver. And what came out of that meeting is about to hit the market like a freight train in April. Stay with me. Now, before I get into what happened in that meeting, I want to give you some context because this matters. The IMF, the International Monetary Fund, is not just some advisory group. These are the people who have the power to restructure entire national economies. They are the people who set the rules for how countries borrow money, how currencies are valued, and what role commodities play in the global financial system. When the IMF quietly shifts its position on silver, it doesn't make the news the same day. But about 6 to 8 weeks later, you see it in the price, every single time. And right now, we are in that 6 to 8 week window. April is weeks away. And the setup is unlike anything I've seen in years. If you're new to this channel, hit that like button right now and subscribe to Let Finance, because we cover the stuff that mainstream financial media either can't explain or just flat out doesn't want you to know. I go deep, I go slow, and I make sure you actually understand what's happening to your money. So hit subscribe, hit the bell, and let's keep going. Now, let me take you back even further, because to understand what the IMF is doing right now, you have to understand why silver has been behaving the way it has over the last 3 months. If you've been watching silver since January, you've seen something strange. The price ran up, then it crashed hard. We're talking a violent $12 drop in a single session. Then it bounced back, then it stabilized around $81 to $85. And most retail investors looked at that and said, okay, it's volatile, that's silver, that's normal. But it wasn't normal. That pattern, the run-up, the violent crash, the controlled bounce, the tight range, that is not organic market behavior. That is managed price suppression. And the IMF meeting is directly connected to why that suppression happened, and more importantly, why it is about to end. Let me explain how this works. The IMF does not directly trade silver. They're not sitting at a desk buying and selling futures contracts. But what they do is something far more powerful. They set policy frameworks that the world's largest. Central banks follow, and central banks hold silver, not just gold, silver, in industrial quantities. And when the IMF signals, even quietly, even in a closed session, that silver needs to be repriced within the global monetary framework, central banks start repositioning. And when central banks start repositioning in silver, what you see on the surface looks like manipulation. Because it is. But it's sanctioned, coordinated, and temporary. And when it ends, the price doesn't just go up, it explodes. Now I want to talk about the specific trigger that brought silver onto the IMF's radar in early 2026. And this is where it gets really interesting. There are two things happening simultaneously that the IMF cannot ignore. The first is the global silver deficit. We've talked about this before on this channel, but let me give you the updated numbers because they've gotten worse. According to the Silver Institute's most recent data, the world consumed more silver than it produced for the third consecutive year. The cumulative deficit over those 3 years is now over 500 million ounces. That is not a rounding error. That is not a seasonal fluctuation. That is a structural systemic shortage of one of the most industrially critical metals on the planet. And the IMF knows it. The second thing, and this is the one that really got their attention, is what's happening in the energy transition. Solar panels require silver. Electric vehicles require silver. Grid-scale battery storage requires silver. And every major government on Earth has committed to aggressive renewable energy targets between now and 2030. The United States, the European Union, China, India, they have all passed legislation. They have all allocated capital. And they are all building at a pace that requires silver demand to increase, not decrease, for at least the next 5 to 7 years. The IMF ran the numbers, and what they found is that at current production rates, With current mine output, with current recycling rates, the world does not have enough silver to meet the energy, transition demand, and maintain silver's role as a monetary metal. Something has to give. And what gives is the price. So now you understand why the meeting happened. The IMF was not sitting around speculating about silver like a Reddit thread. They were doing what they always do, modeling systemic risk. And the systemic risk they identified is this. If silver remains artificially suppressed while physical demand continues to accelerate, you eventually get a break in the paper market. A moment where the number of paper silver contracts outstanding, and right now that number represents over 1 billion ounces of silver that physically does not exist, a moment where that paper market can no longer maintain the fiction that all those contracts are backed by real metal. And when that moment comes, it doesn't look like a normal price increase. It looks like a circuit breaker. It looks like a halt. It looks like the exchanges calling force majeure. And the IMF does not want that to happen on their watch. So they are quietly, carefully, deliberately engineering a controlled repricing of silver. In April is when the first phase of that repricing is scheduled to begin. Now, I know what some of you are thinking. You're thinking, oh gee, John, this sounds big, but how do we know April specifically? Why not March? Why not June? And that is a fair question, and I'm going to answer it directly. There are 3 converging events in April that the IMF's framework is built around. The first is the April COMEX delivery window. This is when futures contracts for April delivery come due, and the physical silver that is supposed to back those contracts has to actually be delivered. Given the current state of COMEX warehouse inventories, which have been declining steadily for months, the April delivery window is the first moment where the paper to physical imbalance becomes visible in a way that cannot be hidden. The second event is the Federal Reserve's April policy meeting. The IMF's silver repricing framework is designed to coincide with a shift in Fed language around inflation and commodities. If the Fed signals, even softly, that it sees commodity inflation as a longer-term structural issue rather than a transitory one, that opens the door for silver to move without looking like a speculative bubble. And the third event, the one that most people are not watching, is the scheduled review of SDR basket composition by the IMF itself. SDRs are special drawing rights, the IMF's own reserve currency, and there is a quiet but growing movement inside the IMF to explore whether hard commodity backing, including silver, should play a role in the next generation of the SDR framework. If that review produces even a hint of a positive signal for silver, the institutional buying that follows will be unlike anything the retail market has ever seen. And this is why I need you to pay attention right now. Because when institutional money moves into silver, not retail, not Reddit, not social media hype, when the big players who manage pension funds, sovereign wealth funds, and central bank reserves start buying silver in size, the price does not move gradually. It gaps, it jumps, it reprices overnight. And the people who are already positioned, the people who bought at $82, at $83, at $85, those are the people who wake up one morning and their position is up 30%, 40%, 50% before the market even opens in New York. Now let me talk about Mexico, because no conversation about silver supply is complete without talking about Mexico, and what is happening there right now is something the mainstream financial media is almost completely ignoring. Mexico is the world's largest silver-producing country, full stop. More silver comes out of Mexico than any other nation on Earth. And right now, Mexico's silver mining regions are experiencing levels of cartel interference that the mining companies themselves are openly acknowledging in their earnings calls. We're talking about armed groups extorting mines, blocking roads, threatening workers, and in some cases, physically occupying mining infrastructure. This is not a conspiracy theory. This is in the quarterly reports of publicly traded mining companies. Fresnillo, one of the world's largest silver miners, has directly cited security conditions in Mexico as a risk to production guidance, and when the world's biggest silver-producing country starts having structural supply problems on top of an existing 500 million ounce deficit, the math becomes very simple. Less supply, same or more demand, higher price. And here's the part that connects back to the IMF. One of the agenda items in that February meeting, based on what I've been able to piece together from multiple sources, was specifically about supply chain risk for critical minerals, including silver. The IMF was not just looking at demand-side pressure from the energy transition. They were stress testing what happens to global silver supply if Mexican production drops by 10%, 15%, 20% due to security conditions. And the answer to that stress test is you get a price shock, a fast one. And the IMF would rather have that price shock happen in a controlled, anticipated way, which is what April is shaping up to be, than have it happen as a crisis event that nobody saw coming. Let me give you something concrete now. Let me give you the price levels you need to watch. Right now, silver is trading in the low to mid 80s. The first resistance level that matters, the level that, if silver closes above it convincingly, is 87.50. That is not a random number. That is the level where the majority of short positions in the silver futures market start to go underwater. When shorts go underwater, they have to buy to cover, and when they buy to cover, they push the price higher, which puts more shorts underwater, which forces more covering. It's a cascade. It's called a short squeeze. And the setup for that squeeze right now, today, is more loaded than it has been at any point in the last 2 years. The second level is $92. If silver takes out $92 on volume, the algorithmic trading systems that manage billions of dollars in commodity exposure flip from sell to buy automatically. That is a level where the move stops being driven by fundamentals and starts being driven by pure momentum. The third level, and this is the one that gets people talking, the one that ends up on the front page, is $100. 3 digits, silver at $100 per ounce. And based on everything I've walked you through today, the IMF positioning, the supply deficit, the Mexican production risk, the COMEX delivery, pressure, the energy transition demand, $100 silver in 2026 is not a fantasy. It is a logical outcome of the data that already exists. Now, I want to address something directly because I know there are skeptics watching this video, and I respect that. I know some of you are thinking, okay, but silver has been about to explode for years. I've heard this before. And you're right to push back on that. Silver has been manipulated and suppressed for so long that a lot of people in this community have become numb to the predictions. Every year someone says, this is the year. And every year something happens to push it back. So why is this time different? And my answer is, the scale of the deficit has never been this large. The industrial demand has never been this structural. The geopolitical supply risk has never been this acute. And most importantly, the IMF has never been this visibly concerned about the stability of the paper silver market. When the institution that oversees the global monetary system starts quietly engineering a repricing of a commodity, that is categorically different from retail investors on social media hyping silver. This is not hype. This is policy. And policy, eventually, always wins. Let me also talk about what this means for you practically. Because I don't want this to be a video where you learn a bunch of stuff and then don't know what to do with it. If you believe the thesis that silver is going to reprice significantly in April, driven by IMF policy shifts, COMEX delivery pressure, supply deficits, and institutional repositioning, then the question is, what do you do about it? And here is my honest answer. I'm not a financial advisor. Let Finance is an information channel. Everything I say here is my analysis and my opinion, and you should do your own research before making any financial decision. With that said, here's how I think about this personally. Physical silver, coins, bars, actual metal you can hold, is the cleanest way to participate in a silver repricing, because physical silver is not subject to the same paper market dynamics that can delay or distort price discovery in futures markets. When you hold physical silver, you hold the actual thing. And when the paper market eventually has to reconcile with physical reality, your metal doesn't care what the futures contract says. It's worth what it's worth. The second way to participate is through silver mining stocks, specifically the mid-tier and junior miners that have high leverage to the silver price. When silver goes from $85 to $100, a well-run silver miner doesn't go up 18%. It might go up 60%, 70%, 80%, because their margins expand dramatically at higher silver prices. The leverage in miners is real and it's powerful, but it also comes with more risk, more volatility, and more complexity. So that's a path for people who have done their homework and understand what they're getting into. And the third path, for people who want exposure without dealing with physical storage or stock picking, is a silver ETF. The most liquid one in the US is SLV. It's not perfect. It has its own paper market issues, but for most retail investors who want a simple, accessible way to participate in a silver price move, it gets the job done. I also want to spend a few minutes talking about the broader macro picture because silver does not move in a vacuum. It moves in the context of the dollar, in the context of interest rates, and in the context of geopolitical risk. And right now, all three of those factors are pointing in the same direction for silver, the dollar. The US dollar has been under significant pressure in 2026. Part of that is the ongoing uncertainty around trade policy. Part of it is the deficit spending trajectory that nobody in Washington seems willing to seriously address. And part of it is what's happening internationally. The slow but steady movement by countries like China, Russia, Saudi Arabia, and India to conduct more of their bilateral trade in non-dollar currencies. A weaker dollar is almost always good for commodities priced in dollars, including silver. When the dollar goes down, it takes more dollars to buy the same ounce of silver, so the dollar price of silver goes up even before you factor in any supply or demand dynamics. Right now, the dollar is weak, and the trend does not look like it's reversing anytime soon. Interest rates. The Federal Reserve has been in a complicated position, trying to balance sticky inflation against a slowing economy. But the direction of travel for rates is down, not up. And lower interest rates are bullish for silver for a very specific reason. Silver doesn't pay interest. When interest rates are high, there's an opportunity cost to holding silver. You could be earning 5% in a money market fund instead. But when rates come down, that opportunity cost shrinks. Holding silver starts to make more and more sense relative to holding cash. And institutional money that has been sitting in high-yield cash instruments starts looking for better returns. In commodities, in metals, in real assets. Silver is one of the beneficiaries of that rotation. Geopolitical risk. I don't need to spend a lot of time on this because you already know what's happening in the world. There are active conflicts on multiple continents. There are tensions in the Middle East that have not gone away. There's ongoing friction between the United States and China that is structural, not transitory. And there's a growing number of investors, not just in the US, but globally, who are looking at this environment and saying, I want some of my wealth in something that cannot be printed, cannot be sanctioned, cannot be frozen in a bank account. Gold has historically been that asset. But silver, at $85 an ounce versus gold at over $5,000, is accessible to a much wider range of investors. And that accessibility is part of why the retail demand for physical silver has been so strong even as the price has been volatile. People are buying the dips. They are accumulating. They understand what's coming, even if they don't know exactly when. Now let me bring this all together and give you the full picture one more time before we close out. The IMF held a closed-door meeting in February 2026 where they assessed the structural risk to the global silver market. What they found was a convergence of factors. A multi-year supply deficit, accelerating industrial demand from the energy transition, production risk in Mexico, and dangerous levels of paper-to-physical imbalance in the futures market that created conditions for a disorderly repricing event if left unmanaged. Their response was to begin quietly coordinating a controlled repricing, a managed move higher in silver prices that is designed to bleed off the systemic pressure before it becomes a crisis. The timing of that repricing is tied to 3 April events: the COMEX delivery window, the Federal Reserve meeting, and the IMF's own SDR basket review. The price levels to watch are $87.50, $92, and $100. The broader macro backdrop, weak dollar, falling interest rates, rising geopolitical risk, is supportive of silver at every level. And the retail investor who understands all of this and is positioned before April is the one who benefits most when the move happens. This is what Let Finance is here for, not to hype you, not to tell you what you want to hear, but to walk you through the actual mechanisms, the actual data, and the actual institutional behavior that drives price in the silver market. Because when you understand the why, you can make better decisions. You can hold through the volatility. You can see the dips for what they are, buying opportunities, not warnings to sell, and you can be patient because you know what's coming. If this video gave you value, and I genuinely hope it did, then take 2 seconds right now and drop a comment below. Tell me, are you bullish on silver for April? Are you already stacked and waiting? Or are you still on the fence? I read every comment. I respond to as many as I can. And your comments help me understand what content to make next. So they genuinely matter to this channel. Also, if you know someone, a friend, a family member, a coworker who has been asking about silver, who has been wondering whether now is the time to buy, who is trying to figure out what is going on with the precious metals market, share this video with them right now before you close out of this page. Because the information in this video is time sensitive. April is coming, and the people who understand the setup before it happens are in a very different position than the people who figure it out after the move has already started. This is Let Finance. I'll see you in the next video. Stay sharp, stay stacked, and don't let them take what's yours.